Hello everyone, this is Evan here from the Trade Risk on Friday, June 10th with a weekend market recap video. We are first going to analyze the current market environment. We're going to look at some other markets, sector analysis, and then finish off with some individual names. Now let's just jump right into the action today. S&P 500 on Friday did sell off almost 1%. We did get a bounce off the lows. We'll discuss that in just a little bit. And for the week, we ended up closing flat on the week, down just 10 basis points. And this is the second week in a row now that we have made no progress in either direction. We closed flat last week, and then of course the week before that, the very last week of May, we had the strong surge higher, 2.3%, taking us back to basically year-to-date closing highs here in the SPY. And since that time, we haven't been able to really move in either direction. Now let's zoom out a bit and take a look again at this weekly chart. Remember, this declining trend line right here off of the highs from 2015, that's what we noted that we broke out from last week, 2 weeks ago now, and that breakout is still intact, right? We're still above that trend line, we're still moving sideways, but we are digesting. We are taking our time. We're basing out right here, and the market's really kind of figuring out what it wants to do. There clearly has been a little bit of momentum that has come out of this market, right? We didn't just completely follow through to the upside and see a nice, equal-sized candle to the upside, taking us to new all-time highs. Instead, we just saw a consolidation sideways. So it's still kind of up for grabs right here. Is this going to turn out to be set up a more explosive move to all-time highs, or is this going to turn into some type of false breakout and we're actually going to roll back over back below this trend line here and start to come back down and retest old support down at 204, carve out a wider trading range? That's what we're on alert for. That's what we're looking for now. We have new bounds and sort of ranges to keep an eye on, and that's what we're going to discuss now looking at the daily chart. So the highs that we got up to was right here on Wednesday. We got up to 212.50, but you could really see, 212, I would say more or less, is your upper level line in the sand. Again, like 213.50, 213.60, I believe, are the all-time highs. So we came still just about 1 point shy of all-time highs when we were at this point here on Wednesday. So I'd say 212 on the upside. On the downside now, this 209 is going to be very important, and it's going to be important for a number of reasons. One, you can see this trend line right here. That's the trend line we were just looking at on the weekly chart that extends from all-time highs. That comes in basically at 209. You can see the 20-period EMA is sitting right around there. But most importantly, this is where support actually was all of last week. All in here during that holiday shortened week, 209 was holding as support. It was more or less resistance back here in April. So this is going to be a pretty important battleground for the bulls to hold. If they really want to kind of keep this market held up with as much momentum as that is still in there right now, they're going to want to hold that 209 level. That's going to be an action area. So coming in next week, that's our downside level, which isn't far below us, right? It's only a point below us, and in fact, it was only about 50 cents lower than the lows from here on Friday. So it is very close to us, but that's where we want to see hold. If you're in the bull camp, if you're in the strong bull camp, that's what you want to see, upper level support hold. Now, once we break through that, if we break through that, not once, but if we break through that, we come back down into this big range that we were in for a couple of months throughout April and most of May. So that's the concern here. If this breaks and we come back into this trading range, we have risk all the way back down here to 203, and it just is real messy in here, and there could just be a lot of overlap and kind of erratic behavior if we fall back into that range. And coming into sort of a seasonal volatile period that is the summer month, summer trading, that could be a very real possibility. That don't think that we have to just trend strongly up or down. We could just be in the midst of carving out a bigger, wider range, 203 to perhaps 212, and maybe for the next 3 months we're going to just bounce around in that 9-point range until election time, or October, November, or after the summer swoon, so to speak. So just keep an open mind. I think Friday certainly changed the tone here, right? Down 1%. Breadth was really weak. Volume outpacing on the downside. Not a very constructive day. You want to see a pullback is fine, but you don't want to see it on, big volume. You don't want to see it on accelerating breadth to the downside. The NYMO went negative on Friday, something I pay close attention to. I don't like to see that. So for us, we've certainly reduced dramatically our exposure here on the long side. We are still long, but we've taken exposure down from, at the peak up here being 85% long, we're down probably to about 30% long, and that does include a natural gas position, something that, a couple of positions that aren't directly equities. So, sticking with the long side, the long thesis, so long as we are above at least this 20 period in the 209 level. And if this market wants to rebound, if this was a nice, hearty kind of one-day shakeout, then, we'll again adjust accordingly and start to ramp up positions as things start to work. But that's the way we're playing it. We're using Friday certainly as a clue here that it's time to pull some exposure off, get off the accelerator, get off the gas there, and just try and wait and see, be patient, and let's not try and jump into shorts right away. Let's not jump back into the long side. Let's just let the dust settle, see what this market wants to do. Momentum's kind of gone here, expecting more of a chop behavior for next week, and we'll see which way we emerge coming out of next week. But again, weekly chart, I think, shows the good picture here, going sideways after a nice breakout. Again, it depends on your time frame, but just keep the weekly chart in the back of your mind. Now, looking at some of the other major indices, IWM, you can see today just basically breaking below the 8 EMA, still holding up really strong, all things considered. Basically, what the IWM did was snap that accelerated trend line higher, and so did the SPY, but this one is much more well-defined here. But you can see we went, 10, 12 trading days here. Really nice, high, pent-up, strong trend right there, and we just broke below it. So, again, it's not the end of the world. It depends on your time frame, but you just want to respect the trend line break and see how the market reacts and see if the dip buyers show up. Maybe they'll show up at the 20 period EMA. Maybe we need to come back down here and do a 50% retrace. Those are the sort of questions you want to start asking yourself and just see how this market wants to react. The Qs, I think, again, I put a post out this week. You can check it out at traderisk.com. I think we talked about this in our weekly video too, midweek video. This is more of the cause for concern here, and this was sort of the bearish scenario that we did outline, is that for the bears, what they really want to see is a rollover here, and they got very much that in a perfect sort of scenario with a gap below support and a lower high in place versus the April highs. Now, you could argue it's not completely confirmed yet until we take out, this support down here. I'm fine with that. However you want to look at it, the point is we did not take out April highs. We did make sort of a lower high here, and we are starting to roll over a bit. Again, same context applies. You just want to see where and if the bulls are going to step in. Is it going to happen right here at the 20? Is it going to happen at 107 on a 50% retrace? Does it have to come back all the way down here and challenge 105 support again? That's what we need to take a look at. But certainly the Qs, the weakest of the three major averages, the IWM, the Russell, still the strongest, and that's the way you just want to keep things in your mind. Doesn't mean that has to stay and persist going forward, but as of right now, that's the way the market is trading. So hope that helps. Let's look at some other major markets here. TLT continues to extend its gain. Weekly chart, I think, just shows the nice picture here. Perfect consolidation in here, breaking out above 132. Everything looks pretty good. If you're a bull here in treasuries, there's everything's kind of going your way. We were short this in here for a quick trade. We were out of this trade though as it started to emerge higher here, and we haven't touched it since. I do like it on the long side, just did not get involved in it, so I'm just kind of sitting here sidelines watching it. But for now, TLT looks pretty good. Gold, this one also metals, gold and silver catching a nice bid, having nice performance this week up to the top end of this range. Weekly chart shows the nice clean picture here. Had the big thrust up January through February, and then we've basically gone sideways now for 3 or 4 months. Very healthy action. We held the 20 period EMA. We're back to the top end of this range. Perhaps we fail again and we have to come back in and kind of move sideways, but for now things look pretty good. Action area above 123. take out these recent highs and maybe you get some nice second leg higher, with some type of measured move from the leg of January to February in gold. That looks really good. Silver, similar situation, different pattern, but same really principle applies. You had a nice run up here, mostly in April. Silver was a little behind gold, had its strong run surge higher in April, pulled back to the 20 period, so it had a pretty deep pullback, but it came all the way back here, retested that $15 level, and now it's shooting higher again. So 5.64% up week in silver, looks strong. Not sure it's at a super actionable spot right here. I do still own some in my long-term kind of account, but nothing for trade, nothing that I'm looking to add to or see very apparent to me right now in silver. Next, let's take a look at oil here. Oil USO had a pretty tough day on Friday, down 3.1%. We were in this position for a few weeks. We closed out of this today right around $12 or so. Small win for us, not as much as we wanted to see out of this long position, but a little too weak, just taking too long, a lot of overlap now. So it's time to just step aside for us. That momentum really isn't there anymore. It's still arguably, of course, in the middle of this pattern, now sandwiched in between the 8 and 20 period moving average within this kind of rising wedge here. So we'll have to see which way this wants to resolve. Clearly, 1165 or so, that's going to be a very important level. But for us, we just did not want to take this into the weekend after 3% down, and we're just going to step aside now. So we'll have to see what happens with oil, but still in this pattern. So keep an eye on it into next week. Looks pretty actionable if you want to try and take a short on this. You may get your chance early next week if the weakness continues. Natural gas had a monster day yesterday. On Thursday, we scaled out of some of our position, 40% of it off near the highs of the day here yesterday. We're still in it. We're still going to let this, kind of digest a bit. I would expect a little more consolidation, just like we saw today. 1% giving back off of yesterday's, 5.6% move. And that was after already being pretty overbought. And that's sort of the beauty of overbought markets and overbought stocks. They tend to get more overbought. So that's what we're seeing here. This big breakout pattern definitely seems to be at work here, which is what we were trying to play for when we got into this position. So everything looks good now on the long side. You do need probably some digestion. Let these moving averages catch up and see which way UNG goes next. Finally, the US dollar had a nice bid to it on Friday, coming back into this big point of control, this 24.50 level. We talked about this for quite some time. You just generally want to be long above it and either short or avoiding it below it, and it's back to this very interesting level. Weekly chart, you can see still just tough to really gauge here, morphing into just a larger sort of holding pattern that the US dollar is in. So we'll have to see which way this one wants to follow it up next week. If we get into some individual sectors here, XLU certainly on fire this week, continues to make new all-time highs here. We've talked about this now for a couple of days. In the midweek video, we talked about how we had this nice base sitting on top of this larger base, always a good-looking pattern, one of my favorites to trade. That did resolve higher, so XLU had a nice strength to it. XLE, despite coming off 2% this week, this just on Friday, did hold higher, although the candle certainly isn't ideal. You could see kind of a rejection of those higher prices, of that breakout prices, but it was still one of the best performers this week when you take it to a relative sense across the other sectors. So XLE, relative outperformer, but still something that bulls probably aren't that happy with. And materials actually held up pretty well this week. Again, they got hit on Friday, and again, not an ideal candle, but only up 17 basis points, but still on a relative basis, they are still holding up, compared to some of the other sectors out there. And some of those laggard sectors would be something like the financials, which were down 1.49% today, and they are now getting back below this trend line that we discussed in our video last in the middle of the week, which we said 23.25 or so is going to be an important area. Financials starting to roll over. Some of the names like a Goldman Sachs look horrible now, and Bank of America coming down, starting to break through some support or at least challenge support. So have to keep an eye on some of these big caps, some of these highly weighted names into next week to see how this support acts, to see if the bulls can step in and defend support, or if we are just going to cut through it and roll over. It'll be very important, and that'll certainly influence what some of the broad indices look like next week. Healthcare also pretty strong. Pretty weak. IBB especially down 2% on Friday. You can see just came right up to resistance here and failed pretty gracefully, and it's just coming back down to the middle of the range. XBI very similar, almost a false breakout here. You could see it did pop above the April highs and then went sideways for about a week, and then it rolled back over and came under. So something of concern there if you're in the healthcare side of things. And technology, like we said, looking at the Qs, XLK, you're starting to see a little bit of a rollover here from these recent highs. So a couple of sectors to keep on your radar. I mean, it's just utilities still continue to do the best in this type of environment, and that's certainly the one clear standout from this week. Now, getting into some of the individual names, Apple just kind of messy, trading sideways here. 101 between 97, not doing a whole lot. Google coming back down and testing sort of this rising trend line of support here. If this starts to roll over, you could see this lower bounds start to get retested again, just under $700. Amazon coming off of those highs, starting to break multi-day, 5-day lows right now below this area, finally back below the 8-period EMA, which it really hasn't been for much of its time since, really March. After regaining its footing in here, it's spent most of its time above the 8-period EMA. So it's starting to come off a little bit. Let's see if we do see a more severe rollover in that. Facebook also coming back down here and retesting this 116 level. It held as support just a few weeks ago. This is basically the open gap area from its last earnings report. So this is going to be an important level for the bulls to defend. We'll have to see how that acts heading into next week. And let's just call it there. I hope everybody had a good week. I hope everybody has a great weekend. Thank you guys for watching, and I will catch you next time.